Hey everyone! Today we're digging into the delivery giant Doordash, and let me tell you, they're serving up some pretty tasty gains. Before we dive in, let me just say, this is not financial advice. Predicting stock performance is about as tricky as guessing what your actual Doordash delivery time will be. So while I'm here to break down some info, do your own research, folks. Just like how you decide on that late night taco order. So what exactly does Doordash do? Glad you asked. DoorDash isn't just about dropping off your sushi at the door anymore. It's a logistics powerhouse connecting merchants, consumers, and dashers around the globe. Yes, DoorDash is international now, thanks to their acquisition of Wolt. They're growing fast. Whether it's through Dash Pass subscriptions or those Dash Mart stores popping up, DoorDash's goal is clear: to be your go-to platform for, well, pretty much everything. Now, let's talk numbers. DoorDash has absolutely crushed it this year. Revenue jumped from $2.6 billion in Q3 2023 to a whopping $2.63 billion in Q2 2024. And let's not forget the delicious gross profit margin of 45.47%. Cash reserves? Oh, they've got $4.85 billion just chilling in the bank. As for their free cash flow, it hit $451 million in Q2 2024, enough to keep the delivery engine roaring full speed ahead. And that's just the appetizer. Now let's get into the juicy details. Over the last 12 months, DoorDash pulled in $9.61 billion in revenue with a gross profit of $4.37 billion. Their operating cash flow? An impressive $1.97 billion. Sure, they're still running at a net income loss of $407 million. But hey, the $1.66 billion in free cash flow shows they're using their money wisely. It's clear, DoorDash's balance sheet is healthier than most of us after a year of takeout. Tony Xu's big, bold strategy. Let's talk about the captain of this delivery ship. This guy isn't just a CEO. He's DoorDash's biggest shareholder with 13 million shares worth about $1.9 billion. And get this, he controls 62% of the voting power. Basically, when Tony speaks, DoorDash listens. His strategy? Simple: dominate logistics. Tony's not just focused on food anymore. He wants DoorDash to own the delivery game for everything, from groceries to home improvement goods. DoorDash Drive and Wolt Drive are already pushing that forward, ensuring merchants can get their goods to you as fast as possible. Now, it's not all smooth sailing on this delivery ride. There's a potential recession looming that could slow consumer spending. And let's be real, who enjoys paying delivery fees? Some folks might start thinking, maybe I'll just pick up my own pizza. Plus, DoorDash isn't alone in this game. Uber Eats, Grubhub, and even the big players like Amazon are in it to win it. Speaking of Amazon, they've been working hard on their logistics. And let's not forget Walmart flexing its e-commerce muscles. So yeah, competition is fierce. But let's not end on a downer. Despite the competition and possible slowdowns, DoorDash is still leading the charge. With digital delivery booming and CEO Tony Xu's long-term vision, DoorDash is primed to keep growing. We're talking potential 15% annual returns over the next 5 years, if all goes well. So if you're someone who loves a good growth stock, DoorDash might just be the dish you're looking for. But if you prefer your investments like Grandma's Sunday roast, slow and steady, DoorDash's high-risk, high-reward profile might not be for you. Thanks for hanging out today. Whether you're ordering dinner or picking up stocks, make sure to keep an eye on DoorDash. Until next time.